Are you a cash buyer, or are you looking for funding to acquire your next investment property? If you're looking for funding, we work with several lending sources that can help qualified investors secure capital at competitive rates. The real question isn't simply how much you can borrow, it's how efficiently you can deploy that capital to create income. Most investors use financing to purchase a single rental property and then assume all the responsibilities that come with ownership: tenants, vacancies, maintenance, repairs, insurance, taxes, and property management. But what if the same financing could be leveraged differently? What if a $200,000 business loan could potentially acquire multiple income-producing assets, generate substantial monthly cash flow, maintain reserve capital, and eliminate the headaches of traditional landlord duties? The following examples use conservative assumptions to illustrate how other people's money, OPM, can potentially be used to build an income-producing estate portfolio rather than purchasing a single rental property. Who is eState? eState is a digital real estate platform on the blockchain where physical properties are tokenized, meaning each property is divided into digital shares, tokens, that investors can buy. This global real estate platform is designed for a new generation of investors and advisors. eState uses tokenization on global real estate properties to own income-producing real estate positions, passive income, and official online careers for eState agents. Instead of needing tens or hundreds of thousands of dollars to get into real estate, you can start with a much smaller amount and still tap into real property, real income, real ownership. That's what leverage looks like in 2025 and beyond. eState uses a two-phase payout model to pay its buyers. Phase 1 pays the buyer a high yield for 18 months. Phase 2 pays the buyer 10% annually after the 18-month period for the life of the property. That's eState, digital real estate that lets you combine the power of real property with the speed and flexibility of the blockchain. Let's look at the example of a $200,000 funding strategy. Business loan strategy, $200,000 capital deployment. A property owner obtains a $200,000 business loan and redirects that capital from conventional real estate investing into eState assets that are structured to generate income without landlord responsibilities. eState Wealth Builder Strategy. Loan amount $200,000. Asset acquisition equals 3 premium properties times 1 minus level 1. Summer Villa equals $15,000 times 1 minus level 3. Land plot equals $51,310 times 1 minus level 4. Dubai development equals $99,250. Total investment equals $165,560. Remaining reserves equals $34,440. Phase 1. Monthly income generation. Monthly income producing properties. Summer Villa, $2,000 monthly. Land plot, $8,500 monthly. Dubai development, $17,500 monthly. Total monthly passive income, $2,000 plus $8,500 plus $17,500 equals $28,000 per month. Your principal is returned to you in 5 to 7 months, paying you 100% profit in the remaining 11 to 13 months. 18-month income projection. $28,000 times 18 months equals $504,000, doubling your principal with an additional $104,000 on top. Loan payment comparison. $200,000. Loan at 10% interest. Loan term. Monthly payment, 5 years, $4,250. 10 years, $2,644. 15 years, $2,150. For this example, we use the 5-year term. Monthly loan payment equals $4,250. Monthly excess cash flow equals $28,000. Income minus $4,250. Loan payment equals $23,750. Monthly positive cash flow. Debt coverage analysis. Over the 18-month income period. Loan payments. $4,250 times 18 months equals $76,500. Total income generated equals $504,000. After loan payments, $504,000 minus $76,500 equals $427,500. Remaining cash flow plus initial reserves, $427,500 plus $34,440 equals $461,940. Loan payoff potential. Total remaining balance after 18 months. Original loan amount equals $200,000. Less payments made equals $76,500. Approximate principal balance remaining equals $123,500 times cash generated during Phase 1 equals $461,940. This creates the potential to retire the remaining debt while retaining significant profits and ownership positions. Actual loan balances will vary based on amortization schedules and lender terms. Phase 2. Annual profit distributions. Following the initial 18-month income cycle, the assets continue producing annual returns. Annual earnings. Summer villa equals $2,250 annually. Land plot equals $5,131 annually. Dubai development equals $9,925 annually. Total annual income equals $17,306 per year. Payout to buyer equals $8,653 every 6 months. Capital efficiency advantage. Notice that only $165,560 of the $200,000 loan was deployed. This leaves $34,440. Available for additional property acquisitions, portfolio expansion, emergency reserves, loan reduction, operating capital, strategic reinvestment. In this example, $165,560 deployed, $34,440 retained in reserves, $504,000 projected Phase 1 income, $17,306 annual Phase 2 income. Positive monthly cash flow exceeding $23,000 after debt service times income to payment ratio of approximately 6.59 to 1. This means the projected monthly income is approximately 6.6 times greater than the monthly debt obligation. This illustrates how strategic leverage can potentially transform one business loan into multiple income-producing assets. Investor question: which option gives you the greatest advantage for leverage, scalability, and income potential? Option A. Purchase traditional rental property with tenants, vacancies, maintenance expenses, insurance, taxes, and management responsibilities. Or Option B. Acquire multiple estate assets producing projected income while maintaining substantial reserves and positive daily cash flow without tenants or landlord duties. The real opportunity. The goal is not simply to own property. The goal is to control assets that generate income at a rate significantly greater than the cost of borrowed capital. When monthly cash flow substantially exceeds debt obligations, investors gain the ability to accelerate growth, reduce debt, expand portfolios, and potentially create multiple income streams from a single financing event. Ready to become an estate member? Visit https://tokenizeddigitalassets.world and subscribe, or send a text to 252-287-0029 to connect with a certified agent.